Hello everyone, welcome to the channel of Tradeometry. Today is Thursday, March 19th. I decided to make a video today because there are a lot of things going on in the past few days. I wanted to share with you guys my most updated view of the market as of right now. So as many of you may know, I said I turned bullish since last Friday. So did the dump today change my view? Actually, no, not at all. Despite all the new development in the Middle East war, despite the new FOMC meeting, I still remain bullish. And let me break down everything for you. This is a brief summary of my takeaway from Jerome Powell's press conference and the FOMC meeting on March 18th. The Fed officially held its benchmark interest rate steady at 3.5% to 3.75% for the second consecutive meeting. The dot plot and rate cut outlook, the updated summary of economic projection (SEP) indicates that the Fed now forecasts only one rate cut in 2026. Powell explicitly warned, if we don't see that progress on inflation, then you won't see the rate cut. So that one sentence from Jerome Powell was pretty hawkish as he's trying to establish Fed's position to fight inflation. Powell also emphasized that the ongoing war in Iran is complicating the economic picture. He noted the committee has little idea how much the war will push up inflation for how long. The uncertainty is so high that Powell remarked regarding their economic projections. If we were ever going to skip a SEP, this would be a good one because we just don't know. And then regarding the leadership transition, with his term as Fed chair nearing its end, Powell confirmed he is willing to serve as chair pro tem if his nominated successor, Kevin Walsh, is not officially confirmed by May. So the bottom line is the Fed is in a definitive wait-and-see mode. The inflation risk from the Middle East war have completely derailed any prior plans for aggressive easing, reducing 2026 expectations down to a single potential cut. Some people say Jerome Powell's pretty hawkish in this FOMC press conference, but in my opinion, he's pretty neutral. He repeatedly says he's uncertain about the ongoing inflation, how long it's going to last, and nobody knows. And he kind of has to say that, right? Because if he says if he's being too dovish, then if the inflation really got out of control, he's gonna be blamed for saying that again. Because we had that precedent that during COVID, he said that inflation was transitory, and it turned out to be not transitory. X on his face. So I understand why he's saying what he said in terms of inflation, because nobody knows. No one knows what will happen to the inflation and to this war. Even Trump doesn't know how long the war will last. However, despite the Fed committee showing forecast of one rate cut in 2026, the market seems to be a little overreacting to this situation. So this is the CME Group website regarding the probability of interest rate expectations from the Fed. As you can see in April, now we have 93% of probability that the rate will be unchanged, but we are seeing 6.2% probability of a rate hike, of a 25 basis point rate hike, which is a little excessive, because even though Jerome Powell did say we discussed the possibility of a rate hike. He also said rate hike is not in anyone's base case. I think the market is also overreacting to Jerome Powell saying that the Fed had discussed the possibility of a rate hike. And then you look at the June forecast. So also very much the same as April. 66.2% of a rate hike, 93% no change, 0.1% of rate cut. And July, pretty much the same story, and you see this tiny little bit of 0.1% of 2 rate hikes. It's kind of weird. Someone would put bad here. September, very much the same story. And you see the rate hike probability increases a little bit. And then October, pretty much the same. December, pretty much the same. And then January, you start to see a little bit more rate cut possibility coming up. March is a little bit more. So this is April. 1 year from now, we're expecting 0 rate cut because this is a medium forecast. And then June, it's still no rate cut. July, still no rate cut. So the no rate cut is still the medium forecast until July 27. Now look at September. Yeah, that's probably a wrong bad data point. So because if you look at the October 27, this is still the median forecast is 1 rate cut. So yeah, that makes sense. But I don't know why there was. This is probably just a bad data point. Okay. But still, I think the average or the median forecast of 1 rate cut is until it will be pushed to October 2027. So I think we will get more rate cut until then, because the market is pricing in the war to be last longer than the previously estimated a few weeks. This we're basically saying it could last 4 months. On top of that, and we have the inflation from tariffs still going on. So that puts a lot of pressure on inflation. And therefore, the Fed cannot cut rate until October 2027. That's the market story right now. But if you look at some of the defense stocks today, the defense stocks are down today. If the market is really trying to price in a prolonged war, shouldn't these defense stocks go up? This is Raytheon, it's down 1%. It was down over 3% earlier. And you look at Lockheed Martin was down. General Dynamic, it was down. Most of these defense stocks are down. And then you look at oil. Oil is actually down today. We're seeing a clear discrepancy or divergence in terms of market trying to price in this event. Doesn't really add up. That's why I bought a dip today. Despite today's deeply red open, the intermarket signal suggests panic is an emotional overreaction rather than a structural market breakdown. The downside appears to be exhausted, presenting a high conviction opportunity to buy the dip. So the first point is the defense sector, right? I just mentioned all the major defense contractors are trading down today. The bond market. Let's talk TLT. The TLT is rebounding from yesterday after the FOMC. So market is basically saying that Jerome Powell was very hawkish, and then it crashed the market. It crashed the treasury. But today, you see a completely different story. It's reversing. It's actually reversed all the loss from yesterday. So that's also a very different fact from the market narrative right now. That's also why I think this is the big buy the dip opportunity. And then you see the market sentiment indicator, the CNN greed and fear index is at extreme fear. It reached the low of 15 earlier. Now it's still at 17, which is still very, very low. Another sentiment index I recommend is the AAII sentiment survey. Look at this. This is from yesterday, March 18th, 2026. The bearish sentiment reached 52%. 1 year bearish high was April 2025. That was 61%. This one is very, very close. It's getting close to that 61% level. It's extremely, extremely bearish. We start to see the extreme fear in the market, and people are starting to price in zero cut until maybe 18 months away from today. And the market is trying to tell investors we're panicking, we are trying to sell everything, we don't want to be in any asset, we just want to hold cash. But it doesn't make any sense to me, because when you look at gold, right, gold is down 4.5%. Silver was down like over 10% earlier. Now it's bouncing a little bit. If we were to expect a prolonged war and we expect inflation to remain high, gold and silver should be trading up, no doubt. And the fact that not only they are down so much today, it tells me the market doesn't have a consistent narrative. So they're basically different parts of the market trying to tell a different story. So this is why I bought the dip, because the market is trying to tell investors a story that is simply not true, because smart money vote with their capital, right? When you see discrepancy, when you see divergence in the market, this is when the market was trying to lie to you. The market is trying to lie to you in your face, trying to get you to sell your asset. Market is trying to create this narrative, extremely bearish narrative, so that you can sell your stocks, so they can take over your stocks from your ownership to their bags, and then they can pump the market afterwards. So what I do today, I bought the dip. Today. I don't want to appear to be a storyteller aftermath. I bought a lot of things today. If you like to get my trade alert, please join my Discord channel where I share my live market analysis and trade alerts. Also, I share my thesis and ideas and all these very, very important market data that I have available. Please come join my Discord channel. I can't wait to share everything with you. So that's all for today. If you like this video, don't forget to like and subscribe. And I'll see you next time. Bye.
Another Monday, green on the screen, feeling so serene. Leverage the assets, living the dream, a money machine. Blue chip vision, make the right decision with perfect precision. Yo, we own the street, can't accept defeat. This bull run is sweet. Market cap.